Hey everybody, Brian Shannon here from alphatrends.net. It's Friday, the 6th of December. Hope you had a good week. Markets were a little bit of a mixed bag, but overall, the NASDAQ had a real strong performance, 3.2%. S&P at another new all-time high. It was the Russell that experienced some profit taking along with biotechs and financials and energy names got hit pretty hard. So don't buy the dip. We always say it, and we'll take a look at those and see why. S&P 500, again, it's at a new all-time high. It's getting extended here. It's stretched. It's up too much, but none of that matters. What matters is we have a pattern of higher highs and higher lows above a rising 5-day moving average. So it remains innocent till proven guilty. Just don't overthink it, especially in the intermediate term. If we break below this level early in next week, I wouldn't be really concerned because we have a rising 5-day moving average. But if we were to kind of do something like this, then it might set up for a little bit of profit taking. I would personally welcome that. Maybe a pullback down towards the 20-day moving average. We've seen that this market has been, the prior test of the 20-day moving average was successful, and that was also the location of the prior peak. So maybe we see a repeat of that. But right now, this is just a potential to be aware of. There's nothing indicating that it's going to actually pull back here. So we have to look at it as innocent till proven guilty. We look at it and say, does it make sense for new purchases in the S&P 500 right here, right now? Well, if you're a day trader, sure. If you're a swing trader, maybe, but your stop, I think, would go under here. So it's getting too stretched for new swing trades. For an investor, no. Wait for a pullback and then buy strength after that pullback. So again, we're kind of maybe running on fumes up here, but maybe this market just continues to run higher into the end of the year. It's innocent until proven guilty. We give the benefit of the doubt to the buyers, just like we gave the benefit of the doubt to the buyers a couple weeks ago over in here. I refused to get bearish just because we were below declining 5-day moving average, because the primary trend, the longer term trends, are so powerfully bullish. When you look at a weekly chart, for instance, there is just no way you can be bearish this. If you are, then you've got to come up with a different approach to the markets, because bull markets continue, that is, rallies will continue. They're more likely to continue than reverse. If we come down to this level, let's say we came down quickly to that on Monday, maybe we bounce up, create a lower high, and then begin to correct a little bit. But again, it's not something that I'm looking for. I'm looking at this market and saying, we are in a great environment for making money on the long side. Let's enjoy that and just be aware that, of course, we always have the potential that we're going to reverse, or that we're going to see a little bit of a quick intraday pullback. But you're much better off holding onto your long positions and managing that risk and raising your stop up underneath the higher lows that make the most sense to you. You're going to make a lot more money holding those trends than you are looking to get cute and get out as the market might have a 1-day pullback. However, for the Russell 2000, it doesn't make sense to be a buyer in here. And as I've been pointing out, we have a very clear pattern here all week of lower highs and lower lows. Now it's looking like a nice flag on the daily time frame. You can look at that and say, hey, isn't that a wonderful bullish looking flag? And it is if it gets going to the upside. Otherwise, who knows? I'm not calling this, but maybe it's just gonna pull back. We don't know. We don't have the luxury of knowing what's going to happen. We are in anticipation mode. And Friday, today, we traded an inside day. Oftentimes, we see an inside day prior to a reversal. For those of you who don't know what an inside day is, it means that today's range was fully inside of the prior day's range, meaning today's low was higher than yesterday's low. Today's low was higher than yesterday's low, and today's high was lower than the prior day's high. So I'm not good at saying it apparently, but it's easy to see what I mean here. Anyways, for the Russell 2000 to become a buy, again, I'm not here to buy dips. I'm not here to buy pullbacks to perceived levels of support. Maybe it's going to pull back a little bit more. Maybe it's even going to undercut the anchor from the election, come back down like this, and then we can see that 5-day moving average maybe go along like this. And I would want to be a buyer somewhere over here. And I would say, if that were to be a place, it's not meant as a blueprint, but just a scenario that would get that 5-day moving average flattened out as we get rid of this data on Monday, this data on Tuesday, this data on Wednesday. It gives the opportunity for the 5-day moving average to flatten out. So if I was to be a buyer over here, I would want to set my stop under here or under here, or maybe half under this level, half under that level, and then the upside target would be simply higher. My price targets are always the same when we're in a trend, higher. We're not looking for a measured move. Those are good to know, but what we're looking for is for the market to tell us how high it wants to go, and our job is then to manage risk and say, as long as it's making these higher lows, we get out when it violates that pattern of higher lows. Semiconductors are still they had a decent week here. They got back up above this on Monday. That is, this was Monday. So we're seeing a little bit of a pullback, and as I've indicated here in a previous video for subscribers, we have lower highs and lower lows. We're coming down to the 5-day moving average. We're at the anchor from the election. I've colored that black now, and we're at the anchor, close to the anchor from the low. The 20-day moving average is declining. That's the red line over here on the daily time frame. That will change on Monday as we get rid of this data, Monday and Tuesday as we get rid of these data days. So maybe we need another day or two of consolidation in here, maybe then a little bit of a shakeout, and then perhaps it can get going back to the upside. I was stopped out of a partial position in NVIDIA today. I bought it over at 139.20 the other day over here, sold a third with a gain of $2.90, stopped out of a third with a gain, a gain of 142.90. So that was a dollar 70. Sorry, that was $2.70 or whatever, 80 cents. Either way, I was stopped out 142.90 on a third. I have a third left. And, that's the beautiful thing is that I have a third left. The stop is still protected at a place where I'll make money at 140.20 because the purchase price was 139.20. And I've got a one-third position. I've locked in some gains. Now, if the stock recovers, what I'm going to be looking for, I'll be looking to get back involved. We'll put an anchor off of that peak, for instance, and maybe early in next week it does a little bit of this action, pulls back, and then does this. And then I would be a buyer again of a full size position over here and have my stop under one of these higher lows. The reason I trade like this is because I don't know if the stock is going to do this, and I would feel like a complete jackass if I didn't take some of these profits. If I owned it at 139.20, which like I do, and I let it go all the way back and didn't take profits, that to me is not what successful trading is about. It's about, locking in gains, listening to the message of the market, taking partials off, and letting the market work for me. The biotech stocks are recovering here. So we had seen that uh, a week and a half ago, we saw that pattern of higher highs and higher lows interrupted. And this week has basically been a sideways consolidation through time. So this is good. The 20-day moving average is still going to take a couple days to flatten out as we get rid of this data early next week. So it might not be quite ready yet, but I do like the fact that we broke this little pattern of lower highs. And now I'd like to see just a little bit of a higher low, and then perhaps this gets going. And I would be a buyer over here with a stop under there for the biotech. So that's something I'm looking at for Monday as a potential upside play. Financial stocks, they pulled back, and this is exactly, they're doing what they're supposed to do. They broke their little pattern of higher highs and higher lows. So a swing trader should have gotten out over here on this day, locked in their gains. Now we've got a pattern of lower highs and lower lows. It's at the anchor from the election. It's got a declining 5-day moving average. So here's another one that if you trade the financials, it's right at the 20-day moving average here on the left, right here. And that often is where we see a reversal, but maybe it does a little bit of this action. And we need a couple days to get that 5-day moving average flattened out. And then, be a buyer here with a stop under there for continued upside. This rally is getting extended, but on the daily time frame, we still have a beautiful pattern in here of these higher highs and higher lows. So as long as that continues to hold, the financial stocks, sure, they're extended, but they are at all-time highs, and this a week ago, and they are innocent until proven guilty on the longer term time frame. Looking for a top is just not the right way to look at this. For you to really be interested in shorting and looking for a short, these markets have to be below declining 20, 50, 200-day moving average. It's going to take a lot of downside for that to happen. Energy names, I've said it all week for subscribers to just kind of reiterate the point. And by the way, if you're not a subscriber at Alpha Trends, you can still subscribe on Twitter, and I give these videos every single day for $10 a month. I do a midday video, I do an end of day video, I give some other educational ideas throughout the day and actionable ideas. In fact, this weekend I'm going to go over some of these crypto miners because they could be setting up, but I'm only to be doing that for subscribers. $10 a month on Twitter, by the way. So, anyways, back to the point here was we were looking at the energy names, and if you recall last week, I said, shit, this looks like it might even be tempting enough that I might buy the energy names, even though I typically don't, because I thought, hey, if they hold at the 20-day moving average and this prior resistance broken tends to act as support on pullbacks. Tends to is the key word there. It doesn't act as support. It often acts as support. And in this case, it wasn't one of those often times, which is why I will not buy just because we're at this perceived level here. Let's call it 94. At $94, was there any evidence that the buyers were taking control? We got a bounce there, but that's not evidence the buyers were taking control because we came right up to the anchor from the election and the declining 5-day moving average, and then the market got smacked hard. It's doing what it's supposed to do below declining 5-day moving average. I had drawn something out that looked like this, saying, here's what I'd like to see in the energy names. And if it had done this, then I would have looked to purchase over here with a stop under here, just like I outlined in the biotechs, or not the biotechs, but the Russell 2000. So it didn't do that. So cash is a position. By holding in cash and not buying at perceived levels of true support is only known after the fact. If we saw action along the lines of this and it began to bounce, well, then we could say that is now looking like support. So we buy here, but we set our stop under there in case it comes back down. You don't buy at the 20-day moving average because the 20 often acts as support. You don't buy at the 50-day moving average. You don't buy at the 200-day moving average. You don't buy at the year to date. You buy when you have trend alignment on multiple time frames. Right now, the daily time frame is ruined. Energy names are broken. Leave them alone. There's no point in going into those names. Let's talk about Bitcoin for a moment. Of course, it hit that 100,000 this week and it came right back. I got lucky. Well, I didn't get lucky because as I told people over and over again, I had two bids in. I had one bid right here. I had it at 92,420 is where I got filled, and then I had some more down here. That brought me up to a 40% uh, 40% position right in here. It rallied up. Well, I sold 10% of that. I now have a 30%. Always have these bids in case you get these flushes in something like Bitcoin. Anyway, so I made a quick, I think it was a 12% move on that one and got out of that most of the additional in there. But Bitcoin, obviously, I think it's probably going to have some more trouble with 100. Ideally, this was a shakeout low and it continues to move higher, so I'm going to hold what I have, but I'm also going to reestablish a bid in here and keep my bid down here at about 91,000. Talking about the crypto names, just real briefly, Coinbase is behaving well. It got back above the 2-day VWAP. So yesterday, of course, we had a big gap up in these names, and those gaps got sold into very hard. So that's the gap from that. And today we got above the 2-day VWAP, so it's kind of doing what it's supposed to. MSTR is looking really intriguing to me because it's in a primary uptrend. We had that big excuse me, we had that big gap up, which failed. Today we came up and tested the anchor from that high, from yesterday's high, and we're still stuck below the anchor from the all-time high here. That is, of course, this high on the daily time frame on the left. But if it does something like this is going to want to be one I have a very close eye on Monday. And as I mentioned, if you follow me on Twitter and you subscribe there for $10, I'm going to do a special video on Monday going over some of the other names that we've discussed in there as well.